There's the one side of me that is saying maybe it's all over. Maybe this is really the top, right? But there's still just that feeling that so many people have not made money and so many people are depressed. And
Yeah, but there's also probably like a subset of like the extractors that have gotten ridiculously rich.
I think this is where the whole dilution element comes into play, right? Like there has been last time was a lot of money came into the system, everyone made money, and that was an obvious sign of a top. Here, because of the wide amount of assets that have existed, there's just been a lot of money sunk in, and then market caps evaporated, right?
And then the president's just extracting billions.
Nothing said on the Hivemind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice. Hello, everyone, and welcome to another episode of the Hivemind podcast. The goal of the podcast is to provide an inside look into what we like to call the Delphi Hivemind, bringing together some of our brightest minds from each of the divisions to share insights, alpha, and shitposts. Today with us, we have the usual crew: Ceteris from Institutional Research Arm, Jan Lieberman, who heads up Delphi Ventures, and Duncan, our prodigious shitcoin scavenger and investor. And I'm Jose Maria Macedo. I lead Delphi Labs, our protocol R&D arm. So, been a pretty intense week and generally an intense start to the year in crypto. Probably worth starting with just DeepSeek and the effect on the markets, just given that's pretty much top of mind. And by the way, we're recording this on Tuesday, the 28th of January, at about 7 p.m. UTC. Markets are bad currently in it's so over phase.
Yeah, we're dumping pretty hard right now. AI coins do not look good. DeepSeek, you want to talk?
4 coins look good.
Do you want to introduce DeepSeek, or who wants to introduce DeepSeek? I guess everyone's heard about it, right?
I mean, the TLDR on it is that you can run models like way more efficiently, and so it's like way cheaper, and so that's like a big hit to NVIDIA's profit margins. And NVIDIA is such a big part of the queues and like the overall market, and so it's selling off kind of just affects everything. There's the perspective that like this is bullish for AI in general, because it like whenever you make something cheaper, more people are going to use it, which definitely makes sense to me. I know Pondering, who's like our AI expert, his take was basically you just reallocate from like infra to further up the stack, right? This is bullish for like apps, application development, all that. So I generally agree with all that. The thing is, even if that's true, if this still causes NVIDIA to sell off so much, it doesn't matter that stuff is true in like the short term, even if it could be like bullish in the long term. I think it'll still have like a big effect on everything, right?
The counter, though, is that if you wanted to point at that as the reason for the continued sell-off, it's harder to do that today. Yesterday, it made sense, right? NVIDIA dragged everything down. Today, equities are bouncing. And if anything, crypto should be least negatively impacted by DeepSeek. In theory, like the cost of GPUs is a bit of a tax on the growth of AI. And so while this comes at the expense of NVIDIA's top line, it should be a benefit to everyone else because they're, you can reallocate CapEx or just require less of it potentially. So you're
getting way higher efficiency on your CapEx spend, right? On your training spend.
Yeah, but
like the point being that everything is bouncing, but crypto is not. So it's hard to point at DeepSeek as a reason for why crypto is doing poorly.
Yeah, well, I feel like I don't know anything about this AI stuff, but if it's better, like if DeepSeek is like a better model and like smarter, isn't that just gonna like encourage like more investment in the space? Like, what if you did the DeepSeek thing with like better GPUs or more GPUs? Like, isn't it just like kind of like a further validation that these models can get a lot smarter than we think, and it's just gonna be like more investment, or is that not the right way to look at it?
Or is it all a CCP scam and they're actually using a bunch of models, which you've had some prominent figureheads in the AI space come out and suggest that.
Really? Have you? I haven't seen too
Scale
many.
AI guy did.
Oh, he said that they had more GPUs than they said. Yeah, but I mean,
Yeah,
their
by like a
breakthroughs have been like independently
magnitude.
validated by a bunch of people.
Yeah, I was mostly being
Like,
facetious.
yeah, I don't know. It seems like they really did have some big breakthroughs. I think the main thing is that China's better at AI and further ahead than we thought, which probably puts everyone into a bit of fear, right? They're seen as like a geopolitical enemy, and so it's value destroying to some extent. Um, yeah, Nvidia is, I think it's probably bad for Nvidia overall. Even though, yeah, like you said, there's this Jevons paradox where people just use more compute. Um, but this moves models more towards inference. And like, there's also an interesting point that the DeepSeek trained, like for inference, they're running on the Chinese chips, the Huawei 910C chips, which is also like pretty bearish Nvidia. Like it's apparently like a pretty big strategic priority for China to become chip independent, which obviously it is for everyone and easier said than done, but that's kind of
Where are all the
bearish.
chips made right now? In Taiwan?
Well, yeah, Taiwan, they're assembled and the supply chain goes like all over the world. Um, yeah, there's a Dutch company, ASML, that's a pretty big part of it too. But yeah, Taiwan is and like when you read about when you read about that as well, like how just it's crazy. Like apparently the Chinese have had like pretty much the full designs. Like they've had spies deep in TSMC for like 10 plus years, and even with the full designs they just can't recreate the chips because apparently it's like just really badly documented. It's just like a bunch of like it's very much like an apprenticeship system. So you have like one guy in one department that knows everything about wafers or whatever, and then someone else that knows everything about something else, and they just like have this apprenticeship model. So it's just like very like no one knows how they actually like put it together. And so it's like it's an interesting one.
Doesn't that feel like a risk for China Taiwan stuff? Like if the AI stuff heats up, they might.
Yeah.
I don't know anything about that, but that's kind of like people have been talking about that for a couple of years now with
Well, didn't
the
Trump just
Russia
talk about
Ukraine.
tariffs on the Taiwan semis as well, like today or yesterday or something? So
Probably
they're gonna get chips made in
he's
America.
putting tariffs on us to secure the northern border. It's like what the fuck?
That's the other thing with the market too, is that I think there's a lot of uncertainty, and there's a lot of uncertainty with like how hard these tariffs are going to go. Like Trump said a lot of stuff before he got elected, and he's literally doing exactly what he said. And I think that maybe people did not expect that.
No, I mean, I thought the way it played out was everyone was expecting a lot of tariffs on day one, so you saw yields ripping, dollar ripping, with the assumption that inflation would kind of come back as a result. But that didn't end up being the case. And then, his plan was mostly use tariffs as like a bargaining chip, more or less, which is you saw it on a smaller scale with Colombia. But I think it's not just let's broadly levy tallies.
What does he want to do to Canada? I heard that it was something like secure the northern border, which I don't know. Maybe that's a thing. I haven't heard of that before. And something about like not paying enough for military. Did you hear what it was like Canada?
It's a big border.
We're getting the
Yeah,
same
I mean
treatment
the
as
trade war
Mexico.
with Canada and the U.S. will not really be good. Obviously, Canada will be worse off, but like everyone just kind of like loses in that scenario. So
Ceteris, do you know what he's saying we need to do?
he doesn't like
Ceteris and I
fentanyl.
are
He doesn't like
Canadians.
he doesn't like fentanyl coming over the border.
Is
He
it coming
doesn't.
through Canada? A lot of it.
I think so. Yeah, a lot of fentanyl comes. I think it comes from like China to
China.
Vancouver,
Yeah.
Oh,
and
well, that's
then
bad.
I mean Vancouver is a problem. Um, but yeah,
Yeah.
I don't know. With that being said, with the DeepSeek stuff, that is not the reason for our AI frameworks selling off. If you look at, maybe we can move into this.
I think the larger reason, I was going to say, just the larger reason is probably digesting how far away a reserve is, right? You saw at one point kind of poly market hit 40% of it happening in 100 days. I don't know where it is right now, but That's come down quite a bit when the EO was to put together a council to figure out how to get a reserve, like what that would even look like, which means it's still a few steps away.
The digital asset stockpile.
Yeah.
Yeah, it's like 15% right now. I just looked at it, and yeah, maybe we can also. I think the stockpile thing is also pretty bearish. Maybe I don't know if you want to touch on
Yeah,
this.
I saw some people were trying to spin it as like, oh, this is bullish for the industry because they're going to own a bunch of different assets. And to me, that is the wrong take. Like, because it becomes less serious. A stockpile is very much less serious than a reserve of Bitcoin. And so if they were actually going out, what they're doing is they're keeping the crime coins, right? So anytime they confiscate coins, they're just going to hold on to them. And that's basically all there is to it. That's very different from going out into the open market and running a TWAP on BTC, right? And so while the strategic reserve, it would send all the ratios like to Hades, um, it would still be good for like USD prices overall, right? You gotta imagine that if the US actually ran a strategic reserve, everybody else would kind of start flowing into this too. The game theory kind of forces you to do it, and Bitcoin is really unique as in a commodity in that nobody's like born on Bitcoin, right? Like you're born on gold reserves or oil or something. The only way to really get it is you just have to buy, right? Um, and mining is just another way to buy. And so, yeah, like that would send, if they actually did it in full force, that would send BTC well over like 250K probably, right? And so, yeah, like ETH BTC, Sol BTC, all these ratios would be down in that scenario, but the USD prices would be way up, right? Versus the alternative
Yeah,
of what we have now. And so, yeah, that's why I think it's bearish that,
Yeah.
I don't know. I wasn't expecting him to come in and actually do an executive order on SBR day
I don't think
one,
it
but
was
I guess,
possible to do it. Yeah.
yeah, it seems like people kind of expect. I don't know. Bitcoin's still 102K. It's like
Yeah, Bitcoin's hanging
Yeah.
in. It's not
Bitcoin's
Bitcoin we're
fine.
worried
It's
about.
it's it's the same thing we've been talking about forever. Like this dispersion is never going away. This is what it is now. You're like
When alt
it's
season, Ceteris.
okay. So they're like alt season is not a thing. We had alt season last year, November, December. The alt season was the AI stuff. Like that was alt season. And then like if you look at, so we have this sector performance dashboard on the Delphi portal. It's free. If you go to the portal, just go to the homepage and you can actually see a link right to it. But I'm looking at these year-to-date returns, right? It is BTC is 9% up, ETH is down 6%, Sol's up 22%. Then you have a couple of the Sol DeFi coins like Jupe and Ray are both up 40%. And then literally everything else is just down so much. Like layer one average -9, gaming infra -25, modular -20, meme coins -24, ETH DeFi -14, platforms frameworks like -62, agents
Since Jan
-30.
1? Yeah, I
Since
guess.
Jan 1, like AI16Z 63.5% since Jan 1 down. Game 81%, game 81%.
I can
Virtual
confirm that one.
Cerebro 85% from Jan 1. Like that is insane. 85% in 28 days. Like
The friend tech experience.
Yeah. The only stuff that's
yeah.
really finding a bid is something with fundamental value. So it's kind of like
Yeah.
trading
Which
adjacent
none of them really
platforms.
have.
Phi is up 55%. Freya. That
That's
agent.
an agent.
Yeah.
Did
That
it get like released around? Like that might be like
no, it was trading a bit last year. Yeah, but anyways, the point is that like, yeah, things have not been great.
Yeah, when do we think this AI stuff bottoms? Because like Jan said, it's like none of them really make fundamental business case sense. And I feel like the step that had done well is like those sold DeFi things. Like, even though their Jupe's expensive, like massive market share, makes money, has a path to making more money. Radium is like actually I think
They
trades at a
also like
reasonable
recently
multiple.
enabled value core,
Yeah,
right? That really reversed a lot of their.
They
theory.
ran
They were
so
down
hard.
on
They
that
ran
50%.
yeah.
they ran so insanely hard.
But like Jupiter and Radium are like more fundamental plays.
Yeah, Jupiter's doing these big buybacks or something. They're like 3 billion tokens or something like that.
So
And they're doing their whole like Jupe first thing, which I don't know a ton about, but they announced it the other day. But yeah, I mean, I still think that when the market gets more speculative, these things are going to be the outperformers. But obviously, trying to like pick that, I thought when they were down 50, 60%, that was probably the bottom on them. And then they've proceeded to go down like another 50% or so since then.
well, yeah. So I think like typically this stuff, if it's actually gonna come back, probably bottoms around like negative 70 to 80%. Like, is that like negative 70 now? Right? Like, what's virtual? Virtuals, I feel like is like the leader. Virtuals is down 63 from the top. So like, yeah, like I feel like it's got a bottom at kind of like the 70-ish, like 70th range.
How do you feel about virtual moving to Solana? Like they're not leaving base, but they're expanding into Solana.
I don't understand what Coinbase listings team does all day. Like what are you doing? I don't understand how the one thing that's drawing liquidity, number one driver of activity for weeks to almost like 2 months, more or less, and zero listing. I just don't get it.
Yeah, they literally gave Peanut the squirrel his final life before they got virtual on the platform.
And they got the VVV one, the
day of that
the
was
day, the same
yeah.
day.
I think or he's name carries weight.
Yeah, the virtual. I've seen some people within virtual's team start to complain the last like day or so, and it's a big reason why they're moving to Solana. I guess it does feel like at this point, all like it was based in Solana for the AI stuff, the agent stuff, and Base is still doing that. But with virtual expanding to Solana, and I think the liquidity pools is like first week of Feb that they're really going to get going.
I've never really seen that work. Like, has there been a DApp that pursued like multi-chain expansion where that was like good, like a net positive? I mean, obviously, like, I mean, especially when you're talking a completely different ecosystem, like you're not just sticking an EVM or whatever. Um, it just generally like ends up diluting your community. I mean, yeah, like some of the projects we incubated tried to do this. I think it was definitely overwhelmingly a mistake. Although the bigger mistake there was probably just Cosmos. But I think the cross chain thing also just means that you have no real tribe. And like
No,
they're
but
on Solana, but
the token is the tribe. Yeah, like it's not
Yeah,
like
I think here it like where it struggles sometimes is where you have like DeFi and it's incentives oriented DeFi, because then you're competing against someone who's solely on that chain with the supply focused on that chain versus one versus you where you're splitting it both ways. It's not like you're relaunching a token. So I think it's more harmful there. But with virtuals, they're not really doing any kind of flywheel where they're emitting virtual as an incentive. So I think it'll be constructive in this case. Yeah.
yeah, it's like I think it can just like if you have to expend a lot of money to like get it going on another chain maybe, but if it's just like added revenue, it could be a flop on Solana, but I don't think it's gonna like hurt them on base necessarily.
I think one of the issues is that the liquidity is locked on Base for like something like 30, 60 years. And so you can't, if you could actually cleanly migrate everything from Base to Solana, then the chances of this working would be way higher. But now, yeah, you're going to like fragment.
But that like there's gonna be our bots running like that. It's fine.
But it's still, I don't know, you have like virtual, you're going to buy it, like you're going to get a worse price. The more chains it's on, the worse price you get.
I know, but like as long as you're kind of like anyone who's looking to buy in like serious size is probably going to go to where the best liquidity is and be thoughtful
Well,
about
I don't. Is the plan to double up liquidity of existing agents in multiple places? I think it's just fresh launches, right? If it's fresh launches, then it doesn't really matter.
I'm talking about
just-
liquidity for virtual token, but yeah, for fresh agents, they're just going to be on either Solana or Base, I think.
I mean, like most they just need one decent liquidity pool on Sol for virtual itself. I mean, I think with the fact that it's on a bunch of centralized exchanges helps kind of alleviate the initial issues of getting virtual in size if you really want to.
Yeah, I don't think that's
Just
a
is there an
problem.
example of a token that has more liquidity on the chain on a chain other than the one it's issued on?
Yeah,
I guess there must be, but I can't think of one.
I don't know if that necessarily matters here though.
They have to get some deep, like the whole thing is getting deep liquidity for virtuals, then they compare everything with virtuals, right? It's part of their token econ and stuff.
Well,
I
the
know, but it's
virtual
like
itself isn't that like you're pairing each one on its own with the same amount
With
of liquidity
whatever.
you're always going to pair it with. So, I mean,
You
that
just need one
element,
deep pool for virtuals
yeah,
that they
which
can just
isn't
put
hard to
into that.
do. They definitely have
yeah,
enough, and
they
they have
have
enough
enough
in
money.
fees.
Mhm.
Yeah.
Like they
That's
have the
fair.
one V2 pool on Base, which has 12 million in liquidity. Like they can.
It will be cool to see like if
Oh, they have a
I
lot
don't
of
think
pools.
I don't
though.
think anybody has outgrown where they first launched on another chain. So if
Yeah.
virtual actually gets bigger on Solana, um, that would be kind of like the first time this has kind of happened like that.
If anyone could do it, it's them, I guess, with the Launchpad model. Like there's very little tie into any single chain.
And I think what
'Cause-
helps is like their design is very accretive to the agents, right? With their recent shift in token econ to pass a lot of the fees back to the agents. Um, like there is a lot of incentive for you to launch there because you do have this kind of bootstrapping mechanism from all the fees from people trading your agent.
Does it actually? How much like money does accrues the virtual token? Because I know someone posted some chart like it's down 99%, but that like didn't include the new contracts or something. Do you know?
No, all the
Yeah.
money
Roughly?
it's just the listing fee, the launch fee that goes to them, and then everything else is just circular. Like they take fees from the liquidity pool, and then it builds up, and then they just buy that token after.
Yeah, but that was what they did before. Like that, they did that with accrued fees. Then they shifted it, so now the fees just go to the agents themselves. Like half of it goes to the agent's wallet, and like then it's like 80 or 50, 20, 30. I forget the exact pockets, but it's like some to the agent, some to the LP, and then I forget that they're like some
So they
affiliates.
only take the listing fee?
Yeah, they've reduced. Like it's basically trading off the fee for increased supply sync and activity on the platform. And so it's like a smaller slice of a larger pie type of approach.
Yeah. And also another reason, like I guess a reason a lot of activity shifted from Base to Solana is like that Trump token that's kind of reignited Base. I mean, sorry, Solana. It's like
Yeah,
I,
that was a reason for it to really explode that day. But I don't know. I've kind of like memory hold that weekend of Trump and Melania.
yeah,
Right?
that was like
Double
2
the
weeks ago.
stablecoin supply, right?
Yeah, that's one thing. Solana stablecoin supply was like 5 bill at the start of the year, and it's over 10 now.
Wow, already? That's
It
kind of like,
doubled it in like a week because of that.
Yep.
damn.
And yeah, it's hard to
I
be
think
too bearish on Solana, just like with
Well,
everything.
there
the
was some
unlocks.
takes
There's
around like,
some massive
oh,
unlocks coming.
it's like
They're not massive.
the takes on I think all the people buying on Moonshot and then not in getting involved in like the Sol ecosystem were pretty mid. Like it's just like not the natural flow of a wallet on Moonshot. It's a standalone.
Yeah, that made no sense. Why do you
It's a
expect a
terrible
Moonshell
take.
wallet to do something else?
I forgot
This
who.
is
Yeah,
this is the problem with like looking at data. There's a lot of people who look at data in crypto and don't know how to like understand the implications of what they're looking at. And that's like a prime example of that. Not understanding the nuances. Yeah. I don't know.
Yeah.
Every Solana's just becoming like the place where you want to, I don't know, launch your app. There's a lot of like new chains coming out this year. There's got like Bera's got like over 2 billion pre-deposits. There's I don't know, Abstract. Their launch didn't go too hot the other day, but it's only like a day or two old. There's still there's a lot of stuff coming. So
I see that I'm looking on this site. It says like only $3 billion worth of Solana unlocks, but I thought it was someone said this was like way understated.
No,
But
it's only like 2-3% of the
It-
supply.
it's
I
like
don't
two
know.
two two point something billion. It's like 7.5 million SOL in March, and then 600K SOL a month after that, right? So 600K times 3 is 180 million.
Yeah, there's definitely a lot of unlocks, but it's like, okay, at some point, once the unlocks happen, they're over. And then you also have the chain that is doing 85% of revenue, 85% of like application, like every single application that makes money is on Solana right now.
no, for sure.
Yeah.
Um, you have the ETF coming. And so it's like, I've never tried to trade personally like an unlock. I remember in 2023 in September, do you remember how afraid people were of the FTX estate, like starting the process? And Sol traded down to $17 in September of 2023, and that was the perfect time. Obviously, it's way different now. I'm not saying buying Sol at 230 is like buying Sol at 17. It's way different, but the most telegraphed unlocks are usually
Nothing
not the
burgers.
worst ones because there's so like Sol is it is the outside of Bitcoin, it's like the coin of this cycle.
I mean,
It's
they get
not
priced
some
in
shock.
pretty far in advance.
Yeah,
Yeah,
you
I mean
saw
it's
that at
not
the end of last
negligible.
year.
The big one, so you have like 2 billion in March, depending on what prices, and like that. I think once that gets through, then you're looking at again price dependent, 150 to 200 million bucks a month. A month isn't much for them for like because then that's assuming all of it's sold. Some will get held, some get staked, some and it kind of depends on the market environment too, right? If everything's dumping, then people are just going to take it and run for the door. But if everything's pumping, then it gets very reflexive and people end up holding.
Yeah. With that being said, though, it's like I see what maybe like a 2x and like a crazy bull market for so I don't believe in these like crazy price targets. It's already pretty rich. Everything is pretty rich. Like Bitcoin, it's funny. Bitcoin at 102K really feels like the safest asset in this industry.
Which it is.
Yes.
Like the risk adjusted return of BTC versus anything else. Like I'm like actually kind of mildly bullish on TIA as like a trade here over the next half year or so. But it's still like, you know, it still makes zero money. Sol has like a fundamental potential case if they keep scaling the chain.
I like we're talking about this now.
I
Makes
think
money.
people are talking about this.
I
Like,
know. I've seen it pick up on Twitter. I'm like, fucking finally, my time is here. Fundamental plays.
I really don't think. I think you could easily see O2 on like ETH BTC by the end of the year, right? And like Sol, you look at Sol ETH, right? And people love to look at Sol ETH. And it looks good for Sol. If you look at Sol BTC, there's a like the thing I'm trying to answer now is not like where Sol ETH will go. I do think it'll hit 0.1 and probably go higher. But it's like, is Sol BTC going to be the new ETH BTC, right? It's just hard. You just hit this ceiling, and like it's just so hard to outperform BTC.
Yeah. Hype. Maybe the Soul unlocks come. Hype comes in a little bit. Fast chain.
I do think the Sol ETF will probably be after the unlocks.
Yeah.
Yeah, I mean for sure. They're only doing the futures in mid-Feb, and unlocks are March. So it's I would be surprised if you get Sol ETF in the first half of the year.
There's some unlocks in Feb too, though. No, I thought they started in Feb.
Yeah. Okay. So I just looked. It's the numbers I'm seeing are 16 million coins, 3.2 in Feb, about 10 in March, another 3 in April, which is like roughly 4 billion, a bit less than $4 billion. So it's, but someone was saying that maybe there's like more stuff. Like, is this the estate? Is this all that stuff that was going, like the OTC deals that were going around like in March or like around that time, a lot earlier in this year? It's the same coins. Yeah.
Yeah, as far as I know.
Yeah, I don't know what else there would be besides this. This is like a pretty massive chunk. Like the big thing that's been on everybody's March 25 has been on everybody's calendar for everyone's talked about that for the last like year or so. It's buy Sol, but just
But that's not
watch
even
out for March 25.
that much relative to its market cap. 4 billion. I don't get. There's got to be more to this. 4 billion to 110.
That's not. I don't think it's the right way to look at it.
Just like the absolute amount of money needed to buy those if they get sold.
Yeah, like it's people even looking at volume, right? So much of that is like market making. It's not like there's constantly directional exchanges of that much money every day. This is a one-way flow of cash, right? And when it's telegraphed, the bid kind of pulls back too, right? So it's not like you're selling into standard market conditions.
We've never seen like, I don't know, the unlocks. I feel like we're not bearish so far in crypto.
Sui had a bad one. Sui's unlock this year or last year, it was in like June or something. I thought it wasn't going to be bad, and then it got absolutely. If you look at the chart, it's like a straight line down on the unlocks.
Interesting.
And I was like, oh wow. Luckily, I didn't capitulate then, but like that shocked me. I didn't think the unlocks for that were going to be bad, and that was a brutal unlock.
I still think it's going to be driven by fundamentals to some degree, like and market conditions, right? If like market's doing well and users activity, stable coins up and to the right on Sol, they'll be a lot less significant and probably mostly priced in. But if it's like if it unlocked today, whew.
So back to the fundamental coins. So we've been seeing it more on the timeline. What do we think? Do we think it's finally time for some coins that have some good fundamentals to shine? I feel like so many people have gotten burned on meme coins and stuff that it's like there's a bit of exhaustion in that.
Well, I think WIF is. I think WIF. I'm looking at the.
Almost at $1.
It's almost under $1.
I know. It's almost under his Binance listing price. Like the all-time low on Binance. But like I do think that there's and even just these AI coins selling off so hard. Obviously they're not quite meme coins, but not super far away from them in some cases, or at least their valuations super stretched. So I feel like a lot of people have just gotten wrecked on memes. And what do we think? Fundamental rotation inbound? Or what?
I don't know. I've never been a big meme guy, but it does just seem like, I don't know, none of these coins look good.
The fundamentals also get a lot worse, like pretty quickly when like volumes dry up.
I know, but that's the thing. Volumes are still high. It's just like dilution across so many, right? Like Hyperliquid, for example, fundamental play I like.
Activity is still there. The WIF chart
is cruising.
The WIF chart is like a long-term McDonald's chart.
Literally. Yeah. Oh, and I'm pulling up.
You don't want to see McDonald's chart.
Okay.
It's probably a good buy here.
I think Tao's got a bad McDonald's chart too.
Let's do since the start of the year. Okay, I'm gonna do some math really quickly.
How are you guys positioned right now? I'm curious. Like, is everyone like max long still?
I'm mostly I've mostly taken the drawdown on the chin. I mean I sold stuff at the beginning of the year and some stuff in December. I have some stables. But like my overall construction hasn't really changed, the AI stuff is taking a pretty big hit. It is what it is. I haven't changed. Yeah,
I forgot this.
I don't know.
Okay, we can go.
What about you?
Do that first, or
did you de-risk it all? You kind of took it on the chin as well.
Like I definitely de-risked at the beginning of the year. Like I wish I did more.
Yeah,
but
Yeah, I sold some stuff end of the year, just like in anticipation of people selling, but no, definitely not enough. And then I've reallocated since, not fully, but yeah, I mean, I've definitely taken on the chin.
Yeah, and Duncan, you were in cash, right?
Yeah, I was definitely overweight cash into the year, and then we sold stuff in January because like trying to defer the taxes a bit. So, and the fundamental plays have actually, they're still down, but like, Hyperliquid's basically flat year to date, or like since the start of the year, like maybe down a little bit.
Banana isn't.
Uh, no, since Jan it's flat, but yeah, it got crushed in December.
The thing is, the
So
AI stuff just ran so hard for 2 months.
yeah,
And so they're actually still up more than most things over like a 2-3 month period. It's just they just ran so much.
and then
And
yeah, Metaplex is another fundamental one I like. That was fine. So yeah, definitely down, but like I feel like I haven't felt like any insane like 70% type drawdowns. I guess Banana was pretty fucking bad actually, looking at the chart from November. But Hyperliquid is my main bet right now, and that's held up well. So that's actually that and the cash have been decent. But so
yeah, Banana's bad considering that's when everything went parabolic and like
I know, but it's still like its fees also went up, so I'm a bit confused. It's paying a 50% APR right now. That's
I
pretty
saw I
good.
saw Lafinity on Solana who does like they're basically like a hedge fund. They use this Oracle based pricing. They are an AMM, but you don't deposit your own assets to it. It's like all protocol owned. They did like 2 mil in trading fees
Yeah,
uh
they're doing a
last month,
ton.
which is like a 55% APR on their token. Um
Would those have all been
that's
distributed, or
yeah, they get distributed.
Yeah, but
Like
you have to lock it.
you have to lock it. It's the token honestly hasn't. I owned it in the past.
It's like doubled since December, or since November, end of November. But it's just like it feels like it could be. I think that the problem with Affinity is like its moat is like ambiguous. It's like they're making markets on Solana, they're plugged into Jupiter, and they do a shit ton of volume. But it's like, why couldn't Jump just like plug into like
Well, Jump doesn't do on-chain
Phoenix?
trading.
Yeah, I know, but like someone like that, like why couldn't a
Right,
market
once
maker
somebody
plug
comes
into
in,
Phoenix? Yeah,
I think it's like regulatory arb, and so I do agree with you that like once these TradFi HFT shops are more comfortable moving on chain, then
then
it
they're
becomes a
probably
harder
cooked.
game. So right now they've just been like raking it. Now they do have like HFT background
I know,
team.
but it's an automated like it's a like I don't know. It's obviously it's cool, and they've stayed around and made a lot of money a lot longer than I think a lot of people thought. Uh, because like these people haven't come in to take their market
But
share.
yeah, that's the thing. If it's a 50% APR on the token, then you actually need the business model to still work for 2 years
Yeah,
to get your money back, right? And so
yeah,
it's kind of sad that like that's how we value the fundamental. But I mean, but it makes sense. It makes sense, right? Like, am I going to hold this and lock it up and get the yield? Because it's a very disruptible business because it's just a trading firm, and trading firms they don't trade at like big multiples, right? They don't give you the massive upside. It's like they're market makers, right? They're
yeah,
not they're not like a VC firm or even like a liquid fund that's making directional bets on stuff. So,
yeah.
but they've
And
been impressive. Like don't get
no, they've
I've
done
been
well.
yeah.
But yeah, so like this is the thing with Banana. It's like it's always traded between like 30 to 50% APR, depend or like 20 to 50% depending where its price is at. But now it's like kept up its revenues for like a year, where you've been earning that for like a year. And it's like, okay, does this continue? Is like the big question on all these businesses that are trading at like such low multiples. And then something like Hyperliquid. So I just did the fees, 47 million so far in January divided by 28. So that's 1.7 million a day in buybacks. So yearly, that's 620 million.
but that's not a 1-to-1 to buybacks though, is it? It's like you choose whether you get either banana, and then there's also a
No, no.
chance of
So
going to sell.
that was hype.
Oh, I thought you were talking about banana. Sorry.
So Hype is 7.7 billion. So yeah, so Hype is like on circulating cap is like a 13x right now on burn, which is like uh feels like that's pretty good. That almost feels like that might be wrong. But I did the math more closely earlier when the volume was a bit lower and it was like 20x. So I think that actually is right. No, 13x is right. So that's like pretty good for like a business like that, where it's like the liquidity is really sticky there. They have like real moats versus like a Lifinity or Banana, a little bit easier to disrupt. Banana has a moat on Ethereum with its sniping, but anyways, but yeah, like Hyperliquid is like a lot more sticky there, and people like project it in the future. It also has like the L1 potential. So and I think that's why it's held up pretty well relative to this other stuff. Like, obviously, it's kind of hard because it launched recently and had the crazy run up and then pulled back. But, 13x on your market cap for a business that's like, the most profitable business in crypto are exchanges, Binance, and growing. It's like pretty feature parity with these sexes, has the L1 like potential tailwind. I think is like that sort of stuff is what's holding up.
I'm looking at the 7-day returns, and XRP is like top performer, only down 2%. It's just so frustrating. It's just
Yeah, the fundamental stuff makes sense. I mean, yeah, like Hype definitely has a moat. That's one of my bigger bags. I have a decent amount of banana that I've picked up recently, just with like how cheap it is. Yeah, it's funny how the difference in multiple, right? And banana basically trades at like a 2 to 4x multiple. This thing's trading at 13. It's like, yeah, moat and growth are really the big ones, but at a certain point, some of this stuff is just too cheap not to buy.
Yeah, and Hype was trading at like earlier in the year, like at a 20, but like with the Trump listing and
I
just
mean,
being
if you're
quick, it's
using the
like
market cap though, then like something like Athena looks pretty cheap too. It's just that obviously the unlocks are
Well, it
way
shouldn't
yeah.
be.
faster.
But
It
the
shouldn't be
unlock
market cap.
profile of Athena versus Hyperliquid is drastically different.
It shouldn't be market cap though. It's market cap plus non plus tokens that aren't
Non-treasury tokens,
going,
like
or
yeah,
like any kind of incentive token. So it's basically market cap plus investor plus team.
Yeah, so the Hyperliquid has no investors, and then they have team at like 30%, but like that.
yeah, that's the real market cap. I think you should use like the Circ as 60% because team is like
I know,
yeah,
but like that
it's
guy, I'm
zero
pretty
cost
sure that
basis.
like Jeff was like a billionaire or something before. Someone said that, so it's like, buddy,
How has he become a
decentralized.
billionaire?
He was like the head of HFT at Hudson River Trading. He's like a fucking Chad.
I've heard
If a
through some
billionaire
decent
is a lot of
sources he's
money.
got like, yeah.
I don't know if
Um,
he's a billionaire, but like he's got, yeah, that's what I've heard. Someone said that, but I think it's like he's very well off,
Yeah,
and
but
it's a
still,
small
you're gonna
team.
use
I think
the
you use like a
use the,
discount,
like
a
yeah.
discounted version of team.
I mean, you can try and rate propensity to sell, but yeah, you want to use a discounted version of the team. Like for reference, I think according to DeFi Llama, Athena's done like 37 million in fees in January.
Does
Um,
that go back to the
and
token? Because this
That's
is
the
like
thing, is it's
I
like
was
revenue and
just
profit is the
yeah,
difference,
I was including just buyback there, not even total fees, which
right?
is like
There's big
pretty
yeah,
distinction,
impressive.
which I think a lot of CT gets wrong when quoting tokens. It's just like,
mhm.
this is what it generates. Like, all right, but what is it actually passing through?
Yeah, that's like Bananas trading at a 2x PE. It'd be trading at like a 1x revenue, less than, which is
I mean,
cheap.
I think that the revenue in December was definitely 27 million, I believe. We can look at I think January hasn't been updated yet.
I mean, I think that it really boils down to like the whole market is basically pretty binary, right? Reserve or not. And in the event of a reserve, like what's going to outperform Bitcoin?
Do you think it's like, what do you think if we don't get a reserve, what happens? I don't think it's as like, I don't think it's that like, still a lot of regulatory tailwinds and stuff. Like, obviously the
Yeah.
reserve is like things go nuts, but like I think there could be a path without the reserve to do decent.
If you look historically, like all the Bitcoin gains have usually been, like catalyst driven, like one big catalyst, big move, and then kind of chilling.
Yeah, but this is like a catalyst of like complete regulatory overhaul. Like a lot of the TradFi people that I talked to, like the SA, what was it called? SAB121 or something.
Yeah, the one where banks can custody.
Yeah, like
That's actually
people,
bullish.
yeah,
Yeah.
like
Yeah,
people
that was
within
very
crypto
bullish.
like didn't give a shit about it, and then I'm talking to these like more like TradFi people, and they're like, "This is huge," like that, like stuff like that is positive regulatory changes. I
That
think.
was actually, yeah, we didn't talk. That is, um, so basically banks and TradFi institutions, when they held crypto on their balance sheets, they'd have to hold them as liabilities in the past. And now they don't need to do that. So basically it opens them up into the custody business, which is, I guess it's not good for like the cypherpunk ideals, but it seems like a lot of the industry doesn't give a shit about that these days
Yeah,
anyways.
we're kind of bigger than that now. You need
Yeah.
this.
So
I
it
mean,
definitely will drive if you can just like log into, JP Morgan Chase and it's like deposit your BTC, right? A lot of people are going to do that. Like, let's face it, a lot of people are going to do stuff like that. So
it adds to the constant drip for sure.
Yeah, I think that like that stuff is like where we kind of have a path outside of the Bitcoin Reserve.
Like you even saw, I mean, because like Sailor dumped a billion in last week, and like BTC did well, and then it just kind of shrugs it off. Like there is a decent amount of exiting happening if you're seeing this guy dumping in size weekly.
Yeah, like
And
MicroStrategy is still cooking along. What's the premium now?
yeah,
I can't
well,
believe
they
that
just
this thing has
expanded
kept
their
up.
like the share issuance allotment by like 30x.
I don't know. It just feels like this. Like I feel like we're in a really good spot. Like I think we're in a really good spot. I feel really good about things. We nuked the complete vapor dog shit, and now like we are building back.
That vapor dog's just gonna get bit up again.
Yeah. No, probably, but I don't know. I feel like it's easier to feel bullish here than it is when like stuff that makes no money is trading at like $5 billion valuations.
there was a good pod, the Odd Lots pod with Howard Marks the other day on like how to spot market bubbles and stuff. Um,
He's been spotting them for like
Yeah,
15 years, though.
not that we're in a position to ever criticize Howard Marks.
no, but he doesn't
Yeah.
think this is like a current
Oh,
bubble because he says a lot of the signs are still not there. Like the only thing is valuations have gone up a lot, but he's like, when there's a market bubble, I'm the star of every party and event that I get invited to, and like there's all these different kind of like
I like
behavioral.
qualitative stuff.
Yeah, it's all like behavioral cues. And he's like, so yes, the market is definitely overvalued on valuation metrics, but a lot of things that I would see in a bubble have not appeared yet. And you kind of feel that with crypto too. Like I want to there's the one side of me that is saying, especially with the Trump thing, I was like, maybe it's all over. Maybe this is really the top, right? But there's still that just like
No, I
there's
don't
still
think.
just that feeling that so many people have not made money and so many people are depressed and like
Yeah, but there's also probably like a subset of like the extractors that have gotten ridiculously
Yeah,
rich.
for
I
sure
don't
and
think you need a scenario where everyone's making money uh, to 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 feel like it's a top. I think this is where the whole dilution element comes into play, right? Like there has been like it's a top because a lot of money's last time was a lot of money came into the system, everyone made money, and that was an obvious sign of a top. Here, because of the wide amount of assets that have existed, there's just been a lot of money sunk in, and then market caps evaporated,
Yeah,
right?
and
And so,
then
like,
the president's just extracting billions from us with his tokens. But I think that's who the real winners of this cycle have been so far. It's been like the BTC and Sol bulls, I guess, and like select pockets of outperformance. But then like these people who've just like played the low float high FTV game or just launched tokens and just extracted a lot of money. And like I don't know how much of that is like just a one-way flow. That's just like we're taking this out forever
like
versus
dude
like
from FTX's collapse ETH is not even up 3x. Like think about that.
yeah,
Like
I don't know if it's
that's
that
pretty
most
relevant
crazy.
though. Like, is that
but
is
it's
that
like
just
a
like a
big
FOMO
part of the
effect?
market. It's like a big part of the market that has just been like allocated to that.
Yeah, it's just like it feels like we need more money coming in, which I think the regulatory stuff could shift in order, and also like a return more to the fundamentals. Because like if you keep on bidding up stuff that's valueless, then it's gonna keep on being created, right? So it's like kind of like you can never get everything like
Your fundamentals are all based on people bidding up valueless shit, though. Like what
yeah, there's definitely an
most of the
element
fundamentals are based on that.
of reflexivity to it for sure, and that's what
All
makes it
all the apps that
sticky,
make
and
money are
correlation.
trading.
Yeah, but I think that the counter to Zay's point is that
Other than stablecoins,
you can have the same amount of like there's a certain amount of activity, and whether that's split amongst 100 assets or 10 assets, obviously we're talking like a magnitude difference. It's still going to be accretive to the fundamental token. So it's like either these 10 assets are doing much more volume, or these 100 assets are all selectively are all equally doing less, and so the sum of the parts is not too different. So I mean, like you could still have a world basically where fundamentals do well without needing the long tail of shit to keep going.
Yeah, it's also like you have to ask yourself the question, okay, like outside of like BTC and Sol, how do you express and like maybe Coinbase or something? How do you? But that's also an exchange. It's like how do you express a bullish view on the space? And like the only way to express a bullish view on the space outside of those, as like from like a long term perspective and some rooted in fundamentals, is like to buy like the pipes of the space, like these exchanges and like maybe Aave or something. Like yeah, like these are the pipes.
But the stuff like you have to have eventually real applications that do stuff for people to trade, right? For the pipes to make money, because right now the pipes are mainly people trading the stuff that you hate, right? Like that's
yeah,
where a lot of the volume. Obviously, majors the majority of the volume, but realistically, like the majority, like the pipes make money trading all the stuff that you hate. So you still do need like applications to come in and do something. I think
yeah,
that to me is the
long
main
term you
bear.
do. But that's like such a long. You could have made that at any point. You could have made that bear case at any point over the last 15 years or whatever.
100%. Yeah.
I think it depends what pipes though. If you look at hype, then the bulk of volume is on the majors themselves.
Yeah, it's on BTC and Sol, and
like you
obviously
shave off the trash, and they're not losing much volume.
Yeah, but the majors themselves, like Sol and ETH, trade based on the traction of their ecosystems. Like especially Sol, right? It trades because Pump Fund is doing like 300 million a year in revenue, and like there's a bunch of meme coins and stuff. Like it all is reflexive down to the shit that Duncan's complaining about. And so
maybe we should do like an episode on like evergreen, like what do we think the actual, because I think we've talked about this before. It's like, okay, Bitcoin's competing as money, stable coins are competing for like payments and that sort of stuff. You have like some deep in stuff actually like makes sense as real businesses. You have the kind of casino element, that's like just general crypto speculation is a big one. And then the fifth one, like, potentially gaming, like with off the grid and some of these things could actually add value to gaming and the metaverse stuff. Maybe we should do an episode on those sort of things. It's like what could actually like be launched through crypto to take part as like meaningful revenue that makes sense and is long-term sustainable. But yeah, it's obviously right now a lot of like,
I think it is mostly just finance. It's just we need better assets on chain.
Oh,
But
RWA.
It's like I've always felt that, especially when DeFi Summer took off. It was like democratizing like private banking almost. It's obviously not the exact same, but being able to access these financial products that you otherwise would not be able to.
Yeah, and
I think
the positive regulatory environment, I think, is a massive tailwind for that stuff, like the RWA stuff. Did you guys see that quote?
The thing is, though, with that being said, though, I think like at a fundamental core, when you talk about like censorship resistance in crypto, I think there's only like two things you really need that for. One of those is being able to like transfer and store value, and so that's just Bitcoin, or it is like actually decentralized stable coins. And so I think the easiest case for that is like Bitcoin backed CDP. And then,
but the thing is, that can never compete on a yield. Like I've thought about that. It can never compete on a yield basis.
Yeah. But then, like, if you think about it, nothing else in crypto really needs like World War III level censorship resist. You know what I mean? Like that's the only thing that you really, and like privacy too. Those are the
I
only
mean,
things
the
that
DeFi
you.
stuff does, right? If you
No,
wanted
it
to rebuild
doesn't.
a financial system post World War III, you do it on DeFi rails. That was
But
like,
but you need to. What are you need that for? You need to transfer and store value. Like that's the main 99% of what you need. You don't need to trade perps in World War III. You don't need to, leverage long on CDP protocols in
Be some
War III. Like
crazy
to
vol.
you
like
probably need credit,
trading on
right? Like
AMMs. Yeah, you need
credit,
credit.
like prediction markets. I mean, I think like the idea, yeah, in a World War III scenario, I feel like we should cut the putt. I feel like we're rambling, but I think the idea in a World War III scenario is just that, yeah, you want to rebuild finance in a world with like zero trust, right? And so everyone just uses crypto primitives for
Yeah,
that.
but I think all you need in that is transferring and storing value, like moving money. I don't think you need anything else in that scenario.
Well, I think you need all the things that you. Anyway, yeah. Let's.
But did you see the Larry Fink RWA thing though? Like he had a quote where it was something along the lines of, "I want the SEC to rapidly approve the tokenization of stocks and bonds." Like I think that's still a narrative to
It's
actually
funny every time
be
like someone
huge.
says something like that, you get everybody from all the different chains and ecosystems coming out like, wonder what chain he's going to put this on, right? Like, you see like the Avalanche guys come out, "Oh, I know a stack
Yeah.
that's perfectly built for
We
this."
got a subnet for
It's
this.
like it's like
Yeah,
everybody
where do you think
just
they would go? ETH or Sol?
I think they would do both. Like they'll just do what people want to wherever people want to hold these assets, right?
Yeah.
Like if the point of tokenizing it is that you want to be able to borrow against your Vanguard, your BlackRock fund, and you want to do that on Solana, or you want to do that on ETH, I think they'll let you like issue those on either. Obviously, there's like liquidation and considerations, right? And like the more you split it up between all these chains, liquidating becomes harder and all this. But yeah, I don't know. I find it hard to believe, and this is my thing with like RWAs, where this was always a lot of people when I asked them like why ETH was going to like start up performing, a lot of people start talking about RWAs, and it's like, well, for RWAs you don't need any of these censorship resistant properties and everything to do RWAs. It's like the total antithesis of that. And so I don't know. BlackRock announced their biddle. Their I hate that fucking word too. Biddle. Like, why
Biddle?
are we still using that? Like, just say build. I don't know.
Yeah, that thing just killed all the tokenized treasury startups that except Ondo. Ondo is somehow
Yeah,
like holding strong through their first unlock too, like a 14 bill valuation. Like, what the fuck are those guys doing?
I think anywhere that is proven that people want to hold assets on, they'll be more than happy to tokenize there. And like I just really, if it also depends what you're tokenizing. If you're tokenizing something that's going to have a lot of turnover, then you're not going to put that on ETH, right? If you're tokenizing something that's just going to like sit there and then go through redemptions and stuff, sure, maybe it goes on ETH, but it kind of depends what asset you're talking about too. So,
Oh yeah, we should do this as like an evergreen episode at some point. Yeah.
yeah,
All right.
well,
Well,
we
this
should.
was
Yeah,
pretty good, I thought.
Thanks everyone for listening. See you again next week
Thanks.
yeah. See
or in
everybody.
2 weeks.